Hi guys, welcome et bienvenue to The Rest is Income, the channel where we talk about building passive income through dividends, cash flow, and passive investing. If you're retired or getting close to, or even an income focused investor, you know how important it is to have steady, reliable income every month. In this video, we will look at 6 monthly income producing stocks that many income investors use to supplement their retirement income. We'll keep things simple, no complicated chart, just what you need to know about income, reliability, and risk. But before we start, remember this video is for education only, not financial advice here. Always do your own research before investing. First, let's make sure we're on the same page. When we talk about dividend stocks, the key is finding companies that pay dividends regularly, have enough profits or cash flow to keep paying them, and ideally grow those payments because life gets more and more expensive over time. What matters most here is consistency, coverage, and growth. For that, we usually look at a few simple numbers. The dividend yield, how much you earn in dividends each year compared to the stock price. The payout ratio, how much of the company's profits go towards paying those dividends, and the dividend growth, whether the company keeps increasing its payout over time. When you stop working, your paycheck may end, but your bills don't. That's where dividend income can help. Think of those dividends as mini paychecks from your investments. Let's meet 6 solid companies that fit that income focused profile paying dividends every single month. Let's start, and there's no surprise here, with a legend in the dividend world, the monthly dividend company, Realty Income, ticker O. It's literally branded as the monthly dividend company. Realty Income owns thousands of retail and industrial properties leased to big names in the US, like Walgreens, 7-Eleven, Dollar General, FedEx, and so and so. It's structured as a REIT, so by law it distributes at least 90% of its taxable income to shareholders. The dividend yield usually sits around 5%, and O has an incredible record over 30 years of consecutive monthly payouts with steady annual increases. The payout ratio here is around 75 to 85%, which is healthy for a REIT. Even in rising interest rate, Realty Income's tenant base is stable. O is often called the gold standard of dividend rates. It's steady, boring, and reliable income. This stock is a real cornerstone for many dividend investors and retirees. Next, Main Street Capital fades in with ticker symbol MAIN, a monthly paycheck. Main is a business development company, or BDC, that invests in small and mid-sized US businesses. This company has a long track record of conservative management, low leverage, and consistent stable monthly dividend. And beyond that regular payout, Main occasionally issues special ones, yielding a total around 6 to 7%. Since its EPO, the dividend has never been cut. The payout ratio is around 80 to 90%, which is fairly typical for a BDC. And because Main invests in smaller private companies, it can be sensitive to economic downturns. Main is like a mini private equity fund that pays you every month. It's a solid example of income with a bit of more risk. Third on our list, Agri Realty Corporation, ticker ADC, the growing landlord. ADC is another REIT that focuses on retail properties leased to high-quality US tenants like Walmart, AutoZone, Tractor Supply. ADC combines defensive tenants with long-term leases, giving investors both stability and growth potential. Often compared to Realty Income, ADC has been a faster grower with a slightly lower yield, typically around 4.5%. But consistent monthly payments and regular dividend growth. The payout ratio here is around 80%, which is quite reasonable for a REIT. For retirees and income investors looking for growth and safety, ADC can be a nice blend. It's not the highest yield, but it's a very solid quality one. Moving on to Capital Southwest Corporation, ticker CSWC. Big yield here, handle with care. This one has the highest yields in our list. CSWC is another business development company. It focuses as main on lending money to lower middle market companies and has been growing its net investment income steadily. It's known for transparency, strong management, and an attractive total return profile, combining monthly dividends plus occasional supplemental payouts, yielding around 10 to 12% and sometimes even higher. The payout here is very high, often around over 100%. CSWC is an example of high yield, high risk. For retirees or oriented income investors, it can add income, but it's the kind of stock you'd hold in moderation, not as a core position. Next, we have Stag Industrial, ticker STAG, warehouses for the future. Stag Industrial is a real estate company specialized in industrial and logistic properties that owns industrial warehouses, benefiting directly from the growth of e-commerce and supply chain expansion, the kind of building companies like Amazon use to store and ship products. Stag focuses on single-tenant industrial buildings, one of the strongest real estate sectors in the market, giving it exposure to stable long-term outlook. It pays monthly with a yield typically around 4% and a steadily improving balance sheet and great dividend consistency. The low payout ratio here is around 60% and it's attenuated by lack of growth. For retirees, stock is a way to benefit from the rise of e-commerce while collecting regular income. And our last monthly here is EPR Properties, ticker EPR, Entertainment and Experiences. EPR focuses on experiential real estate, things like movie theaters, ski resorts, and amusement parks. Fun and unique rate, but more cyclical. It depends on people spending money on entertainment. It struggled during COVID, but it's been recovering now. The risk is higher than average, but the dividend yield around 6 to 7% compensate for it. The payout ratio here is around 70%. For retirees who want income and some exposure to a fund sector, EPR can make sense, but just know it's more cyclical. Alright, so if you're into monthly dividend stocks, what you really want is consistency, no dividend cuts, and steady cash hitting your account every single month. Check out these charts here. Those small dark lines, you see them? That's where the company switched from quarterly to monthly payouts. Now let's break it down. Oh, no cuts at all. Main, those big spikes you see are just special dividends. ADC had a small cut after the great financial crisis, but for the rest it's okay. Stag, no cuts. EPR Properties got hit with a cut after 2008 and during the COVID first lockdown. And Capital Southwest, solid, no cuts either. Yeah, these are some of the most reliable monthly payers out there if you're chasing consistency. So what's the takeaway here? If you're retired or close to, or if you want income, not income that disappears when market gets rough, and you want a mix of consistency with or ADC, growth potential like main or stag, and higher yield with caution, of course, like CSWC or EPR, you may have a selection of 6 stocks to consider here. The goal is steady cash flow you can depend on, not just chasing the biggest numbers. You have worked hard for your money. Now it's time to make your money work for you, because after all, the rest is income. If you found this helpful, please like the video, subscribe, and turn on notifications so you don't miss the next episode of The Rest is Income. Thanks for watching, merci et au revoir.